Welcome to What Happens Next, the YouTube channel and podcast dedicated to having more nuanced conversations about some of the challenges and changes we face in our 50s, 60s and beyond. And we talk about quite a lot on What Happens Next in terms of building financial wealth, building social wealth, thinking about our well-being in a nuanced way. But I know that from my perspective, when I'm helping business owner clients in particular, one of the things that we do when we're building their financial plans is think about planning for the best, looking at what the best looks like, but also being that pragmatic pessimist and preparing for the worst. Because what we want to do is make sure that we're thinking about the things that might derail that plan so that we can do something about it. And that's the conversation that Nathaniel and I are going to have today. We're going to explore some of the things you might want to be aware of and some of the things you want to do to take practical action to make sure that you're fully protected. Nathaniel, how are you, mate?
Yeah, good. Tired, just had a baby, but yeah, good. Apart from that.
Yeah. So what's sleep like at the minute then? Is it just how much you get in? What's happening with it?
Sporadic, less than usual, but yeah, whenever he whinges. But yeah, no, it's right. I mean, I'm sure most of the people listening have been through it, so yeah, we're all right.
Yeah, you know what's interesting? Like we have, I tend to, I find myself having quite a lot of conversations about kids and grandkids, and it always my two are 22 and 14 now, and Charlotte was slept through the night and absolutely perfect. Sophie is still up quite a lot. Now it's playing quite loud music as opposed to keep me up because she's hungry or something's wrong. But the interesting thing is, two kids can be completely different. I still get a bit jealous when people say, "Oh no, my kid's fine; they sleep through the night." But
yeah, we've had a few people say that to us, that they've managed to have that at sort of 8 and 10 weeks. So I was like, oh, I'm really pleased for you.
I'm pleased for you, but it's not happening in my way.
Yeah.
Yeah, that's it. So tell us a little bit about you, mate.
So I'm Nathaniel Lee. I am Managing Director of Business Protected. So we are a specialist insurance brokerage for businesses, so predominantly in the SME market. And what we do is not your sort of, your employer's liability, PI, that sort of stuff, because there's loads of people who do that very well, and my knowledge of that isn't brilliant. But what we do know very, very well is the SME market in terms of the people within the company. So it might be things like shareholder and key person succession planning sort of bits for the business. But it's also tax efficient products through the company, such as Relevant Life and others, as well as, which we'll come on to when you've built a business, it's very successful, and you've got some significant wealth behind you. What insurance strategies can you put in place that will mitigate IHT? So there's quite a few different areas. Outside of the sort of day job, I'm on the Protection Distributors Group board, which is an industry body aimed at pushing the insurers in the right direction. So things like a claims charter was done by us to make sure that all of the insurers are paying in a timely manner and don't put any hurdles. When the most important part of an insurance policy is when it actually pays out. I'm an ambassador for another industry group called the IPTF. I contribute to industry articles and sort of training and things like that as well.
What made you choose this profession? Why was this something you wanted to do?
Well, I mean, definitely at school, it wasn't, this is what I want to do. Yeah. I mean, because I didn't know it existed, to be perfectly honest. But I had a little bit of a circuitous route to get here. Went to university, did a postgrad, went into education, started a company there. Yeah, some life changes happened, and I retrained to go, I'd say, back into financial services because I've done a bit of time in corporate risk. And I went into mortgages initially. Mortgages, if you've got a big back book and you're getting through them, is a good way of earning a living. But because I was new, it was a bit of a hard slog. But what I did see was a lot of opportunity on the protection side of things. So life cover, critical illness, income protection, etc. The niche that was identified not by me, by lots of other people as well, but the niche that we sort of try and serve is the business protection space, because there's too few, people in the mortgage and protection world, financial advisors, accountants, solicitors. Everyone's got the same access to the same sorts of clients, but this particular area is a bit of a niche that not too many people. I don't obviously you talk about it, but there's quite a few people that we speak to that really don't. So that was the opportunity and why we started doing it. Me and my business partner, I worked for him initially, and then we set up a company a few years ago dedicated to specifically trying to change that for the area of reach that we could achieve. So whilst we've got all of our professional connections and we market and do all of those sorts of things, we're also the preferred broker for several top 100 accountancy firms, as well as one of the networks that is in our sector. So we help lots of other brokers who don't deal with these sorts of things have access to this advice for their clients, and we work alongside them.
Love that. Yeah. So I'm not yet. I'm getting close. But if I was a business owner in my 50s, business is going well.
Yep.
I'm thinking about what could derail my plan, and the value of my business is part of my plan moving forward.
Yep.
Selling, MBO, whatever it may be. What sort of risks do I need to think about when I'm thinking about making sure that my plan is as robust?
Of course. So it's obviously dependent on how long you've been going, how big you are, number of staff, all that sort of thing, those sorts of things. Yeah. But there's probably several that you would want to at least consider. So the first is shareholder protection. If you're the only shareholder, or it's you and married partner, civil partnership, then you probably can ignore this part of the podcast. But if you've got multiple shareholders and you're not in a relationship with them, and someone either dies or gets very, very sick and could never work again, in your shareholder agreement, assuming you've got one, there is a risk that person needs to be bought out and you don't have the liquidity to do so. Yeah. So all of a sudden, let's just make it simple. Me and you are in a business together. You pass away. I'm now in business with your partner, which we never agreed to, or vice versa. Now, I know you and your partner work together. Mine doesn't. She works in a completely different sector. You wouldn't want to be in financial services with her because she doesn't have a clue. Very clever, but she's got no experience in this sector. So what that does is it enables you to go out and buy her shares back because she's got them from me. You retain ownership of the business, but she gets fair value for all the blood, sweat and tears that I've put into growing it. So that's really important. But just sort of going, to one of the points to make, if you've got a shareholder agreement, you really need to. Now, we don't do those. It's a legal document. You need to get a solicitor to do it. Yeah. But that outlines lots and lots of different things that could potentially derail you. We're just sort of looking at one, which is, what happens if the worst happens to that one of the shareholders. But there's also lots of other clauses in there that a good solicitor will be able to talk you through. So that's number one. Number two is key person cover, which is are you as a business heavily reliant on yourself and or some other individuals within the business? Because if you're running up to sale, not only would it be a problem trying to sell a business where the share structure is a bit up in the air, but it would also potentially be quite difficult if you're looking at certain multiples for your business, and actually one of the people, let's say a head salesperson, is bringing a significant proportion of gross profit. They get cancer or they're off long-term sick with a mental health issue, for example, that drops. Your multiple is based on what you're doing. And when someone's auditing it to see if, go through the due diligence process, they say, well, those numbers looked really good, but the projections aren't as good because that person's not there anymore. So protecting your, the running of your business and the profit that you're generating from those individuals can be incredibly important. So they're probably two key ones. If you've got significant debts, you might want to look to protect those so that they're managed if someone dies again. And then on the personal side, are you making the most of the tax efficiencies through the business? So relevant life plans are something that's lots of businesses haven't heard of, but they're an incredibly useful tool. So akin to an ISA is a tax saving scheme for savings, a relevant life wrapper is a tax vehicle for a life insurance policy when put through predominantly a limited company. So putting your own benefits through there, that's not necessarily answering your question directly, but there's a sort of follow-on one, which is income protection through your business. Again, if you structure it correctly, it can be offsettable against corporation tax. And whilst you go off, or a key person goes off long-term sick, you've got the key person cover that comes in, protects the company, and you've also got this policy that's going to pay that individual who's off for a long time, rather than you as a business having to pay that individual. Because if you are an SME and they're earning a lot of money, or if it's you have
an impact.
Yeah, it's got a huge impact. It's not just the impact on you and your family and not having any money. It's also the impact of you draining it out of the business. Because if you're on the smaller side, how long can you drain it for before it goes under? And how does that impact that sale value? Because again, if you've taken a couple of years worth out of profit without topping it back up, that valuation is going to look very different to what it did before. So I think they're probably, for me, the key areas. And then just a touch on making sure that the right people in your business, because I know we're in an age where AI and tech and all that stuff is at its zenith, and that is really important to make sure that your systems and processes are in place and very, very good. But a lot of businesses are still, the bedrock of it is the people within the company. I know it's absolutely.
But it's an interesting thing, isn't it? Because you look at and I mean, I don't know what the future's going to hold, and it seems to be. I'm fascinated about this AI thing and trying to learn more about and understand more about it. But so many businesses are based on the relationships within those businesses, right? So actually, where is the value? The value is in good systems, processes, and technology. But often, for a lot of SMEs, the value is in the reason that your clients work with you is because of the people.
I sat with an accountant yesterday. They've got 11 or 12 people, and they are doing all of this stuff. They're trying to make sure that they've, are implementing a lot of things, and they are quite a long way through it. But what that does for them is that then it gives them more free time to spend on the most important thing, which is the relationship building. Because instead of them being transactional, it's great, everything's smooth and whatnot. But then what you're really then coming down to, if there's no relationship, is price. So they're aware of that, and they want to make sure that
they're doing all the value-add stuff, all the consultancies
exactly, which is why we were talking about these things. But just going back to finish off that point, the thing that I was going to say is, if you're reliant on the people within the company, you don't want them to leave. Really, there may be the odd one or two, but if there's a mass walkout just in the run-up to sale, then you're not going to sell it. So putting the right value-added things in for them in the form of employee benefits can be very, very useful, because it's if on the face of it, if all things are equal and one job's giving you a salary and the other job's giving you salary, private medical, car, dental, weapon service, etc., you're probably going to choose the latter. So you can add that in for the right employees, or all of it. It's it's as bespoke as you want it to be.
So if you're looking at your business, you're in this run up to thinking about what's next for you, and you're looking at your business, and you've built a team, or you're building a team to make sure that you've got freedom and flexibility to decide what's next, and you've got a team of 10. How do you decide who's a key person or not? So,
the question I was asked yesterday, because I sat down with a big solicitors, and they said, we're looking at this. And I asked initially just to see what they would say, who's key, and they said, well, define it.
Yeah,
everyone's key to a degree, right? Because if they're at the business and you're paying them a salary and they're not doing anything, you probably should get rid of them, to be perfectly honest. However, there isn't necessarily a financial impact to the business, or a significant financial impact to the business, if they weren't there long term. So what I ask them to do is start at the top and identify anyone who's lost to the business for a protracted period of time. So not a couple of days or a week or whatever, but months into years. Would you really feel that? And if the answer is yes, then they're probably key. And key person cover doesn't have to be for huge sums. It could be that it's for an MD, right? And they're out, they're getting the business, they're doing the business, they're managing everything, You need probably a high level of cover for them, because finding someone that can do all of those things, you might not be able to do. You might need to outsource some of the services, and you might need to get someone in who's salaried to do that job in large part. But then you might go down to someone who is head of a technical department or a HR director or something like that, where actually there's a ready-made market to find a replacement who could do that, because it is a profession. You just need to go through the 3 months to find the right person, and the 3 months notice that they've got to give, and all that sort of stuff. So it's sort of horses for courses in terms of the severity of the impact, but it's first identifying what do you think is someone that's key to your business. And when I was speaking to the solicitors yesterday, it wasn't just the equity partners and the other directors, it was also some of the top fee earners, because they generate a lot of profit.
Yeah. And when you're looking at the level of cover for those sort of individuals, what are you factoring in?
Broadly speaking, two metrics. One is, what is the monetary amount that person's responsible for? So if we take a very simplistic view, if you've got someone who's a sales director bringing in lots of business, or you've got someone who's not client-facing but is really important, so for example, an HR director or an FD or something like that, on the sales side, you might look to replace the gross profit that person's responsible for, because they're bringing in £1 million a year. To find someone that prolific at what they do could take a period of time. You're going to just lose that gross profit for 6 months, 12 months or whatever.
Yeah.
The other side of it is, okay, an FD at a reasonable sized firm, maybe it's 100 quid a month, 100 grand a year, sorry, an email popped in and I got completely thrown. 100 grand a year, and then, that's going to take you a period of time to recruit them. So you might want to look at a multiple there. The other side of it is, how long realistically is it going to take you to find that person? Because that is the multiplier of the initial figure. But even before that, the brass tacks of it is, what would you actually do? I mean, your podcast and a lot of what we've talked about in the past is what happens next. I don't use that exact phrase, you've probably copyrighted at this point, but what I try and do is really get underneath the hood and see what you would really do if these things happen. Because sometimes they say, actually, we wouldn't replace this person because, we'd be able to manage it with a little bit more support around the existing team. If that person wasn't there, it would be really difficult. And then you're thinking, well, are they that key?
Are they key?
Yeah. So on my first iteration of that question, they might go, right, these are the key people. When you whittle it down, it might end up only being these people. So that's an important distinction to make. And
I think the point you raise is really interesting one, because I think the element of like thinking about sort of stuff is to ask those scenario tests and ask those questions. What would you practically do if this were to occur, and how would you deal with it? Because that then tells you whether there's a gap. I think the interesting thing is when there's silence, it tells a story as well, doesn't it? Because the element of and it's such a weird one. Nathaniel, you've known me long enough now to know that I'm a personal optimist. Yeah. Also in my own life, I think and as a business owner, I think there's a real value in being a professional pragmatist and sometimes pessimist, and saying, what's the worst that's going to happen that's going to derail all of my optimistic plans? Because then I can fill those gaps. And that scenario testing, and it's so interesting, isn't it? Because we we do it, as you said earlier on, we do it in the areas that we're legally obliged to do. You know, we've got PI and we've got, you know, content insurance, or, you know, all of this stuff. But then in the element that's probably the most important in most businesses, the people, we just don't do it. Why do you think that is?
I think it's kind of what you said. I think it's because of the requirement to do something. I mean, most people, 99.9% have car insurance, don't they? But there is the odd person that tends to drive a bit erratically that maybe hasn't insured themselves, and you really hope that when you have a crash, it's not them.
It's not them.
Yeah. But it's illegal, as far as I'm aware, to do that.
Yeah.
And we still get clients who've done a mortgage, for example, been referred by a mortgage broker, and they say, oh, well, I have to have life insurance, don't I? And it was, as far as I'm aware, it was a requirement long before I got involved.
Yeah,
probably 20, 30 years. The only thing they need is buildings insurance, because if it burns down and they lose their security, then fair enough. But, you know, some people can't get life insurance because they've got lifestyle factors, medical history, just, you know, and then that means what? You can't have a mortgage because you've had cancer, for example. So, you know, I think there's an element of, oh, I've got to do it, I'll do it, what's the cheapest thing? And that's, you know, a race to the bottom. It's not where either of us our services. I think education around these things is paramount, because with the personal protection environment that we operate a bit in, there's lots of very, very good advisors, and then there's lots that just churn through as much low-level advice. They're not really giving advices. Your mortgage is this is the policy you should have, take it or leave it, next. And I think because there's some people will say to me, well, you're recommending this figure, and I've been told this figure before. You're like, yeah, you're right. There's 10 policies here, for example, for your business, family, blah, blah, blah. It covers all of it, and now you choose what's most important. This one down here that you or your mate had before, that was the other version of the advisor community, which is you literally just had a decreasing life insurance policy.
It's a commodity, isn't it? It's not advice.
It's almost execution only.
I want to explore that a bit, because there's some elements that both you and I know that are really important when people are thinking about what cover they need to put in place, particularly with the shareholder protection element, but also with the key person. But I'm thinking from a perspective of a business owner, and the if this is the first time you've listened to What Happens Next, welcome to the show. We are committed to making sure that we do as much as we can to help you navigate whatever's next in your life. And there's a home for What Happens Next. What Happens Next Life. We'd love for you to visit the site. On it, you will see loads of interviews, a link to take the What Happens Next quiz, an opportunity to sign up to the waiting list for the book, and much, much more. Take a look on the visit site, and we'd love to know what you think. Importance of just keeping good people in their business. When you're thinking about retaining your good people for that next step, and we're thinking about the benefits that might be attractive, how should we approach it as business owners when we're thinking about building a benefits package?
So there are a lot that we don't advise on, things like electric vehicles, right to work, bits and bobs like that. So just very briefly on that, I would suggest that if you want to explore that, find a consultant that can come in and help you with we've got clients who are consultants that do that sort of thing, and we recommend them when a client's looking for more broad employee benefits packages. On the insurance side that we do, there's really four on a group side. So you've got private medical, death in service, group income protection, group critical illness cover. In the SME market, which is 99% of our clients, the most attractive thing generally at the moment is private medical insurance. And the reason for that is the NHS, God love it, is struggling, and business owners see it as a value add that the individuals can actually access relatively regularly, because if it's death in service, you're only going to die once. Whereas you might have something go on, bad knee, eye test, whatever. but the sort of the backside of that is you can get seen much quicker and you can come back to work. So it's mitigating lost productivity. So that's usually number one. Death in service is a close. Oh, sorry, you've got a question?
Oh, no. Tell me.
Death in service is probably a close second, because death is an emotive conversation and it's cheap, because the chances that you die during your working life, I think it's about 4% of us, so it's pretty low, and it's priced accordingly. An underserved one, which I think should be more of a conversation for most people, is group income protection. Income protection is sort of touted as the least talked about protection policy. I think it's business protection in general, but on the personal side, I think that's probably right. For anyone who doesn't know what it is, it's an income replacement up to a percentage of what you can show that you earn, that kicks in when you're off sick. It could be a physical condition, a mental health condition that you've not had before and is stopping you doing your job. So it's got to be quite severe, but and then you put a claim in. There's a deferred period, a bit like an excess on your car insurance, so you choose how much that is. Once that's over, you start getting the income paid to you monthly. So why it's an incredibly valuable product is it dips in and out of your mirroring your health. So you're off for a couple of years with something, it gets better, you go back to work for a few years, but then something else happens and it can kick in again. So you can do that on a group basis. It's the economies of scale on group benefits are really good. You have much lower underwriting requirements for the individuals.
Yeah.
And the price, whilst it does annually review and can go up, per pound of cover is significantly cheaper than doing an individual policy. So having that as a workforce benefit, typically we would see something like 75% of income at either 3 or 6 month deferred period, and it would run for a period of time, typically up to state pension age, but you can also do short 1, 2, 3, 5 years.
And that paid to the individual directly or to the business? So
the money comes into the business initially because they don't have everyone's bank details, and then things like if you've included it, national insurance, pension contributions, bits and bobs like that are deducted, income tax is deducted, and then the remainder is paid to the individual. So that's why it's an employee benefit, because the individual ultimately gets it. But it is also it's a business benefit because they aren't having to foot the bill. And in a large corporate space, it's maybe a little bit more dispassionate. In our sort of areas, you're with these people all the time, and it's a close-knit team. What would you do if that person was on their knees? Would you just say, look, well, it's in your contract, you're only getting statutory? Or would you try and help?
Yeah.
Most people would, yeah.
You'd want to help, but you need to get the balance right between whether you can afford it, you insure against it or not, right? The challenge you've got is if you haven't got the insurance, trying to get that work done and continue to pay somebody else out is a tough financial decision to make.
100%.
Yeah, but the insurance helps with it. It's really interesting. I had a conversation because we've got the book coming out in May.
Yeah,
we're doing loads of work. We're doing loads of market research because at the minute we're going to be launching the course, the What Happens Next course in community when we launch the book. And so I'm doing loads of market research in terms of people who I think will give me unique insights into helping me design something that's really, really, really good. And I had a really interesting conversation yesterday where we were talking about these areas of well-being. So on the What Happens Next model, we talk about the importance of continued work, that might be paid or unpaid, the importance of community, the importance of social engagements, the importance of money, and the making sure that you've got the money and your version of enough, and the importance of physical well-being. And the interesting comment that this particular individual made to me is, I think all of them are equal, apart from, and this particular individual 62, I think physical well-being is more important than all of them. Because if I haven't got that underlying element of physical well-being, I can't do the rest.
Yeah.
And I think and I'd be interested in your thoughts on this. I think my perspective on healthcare has changed actually over the years. Because both my girls were born in the NHS, they did a brilliant job, and thankfully we've been fairly healthy enough not to use the NHS that much. But I can't afford to wait. I just can't afford to wait. And I think most people we speak to, if there is a health issue, and look, there's the element of keeping fit and eating well and sleeping well. I think the interesting thing, and the more I speak to people who are in their 50s, 60s and beyond, the reason they protect themselves and pay for additional private health care isn't the level of care, it's the time.
Access, isn't it? Yeah, I think whoever you spoke to yesterday, I'd agree. I think it's a bit like Maslow's hierarchy of needs, isn't it? You've got certain things that if you haven't got safety and security, you can't worry about what you're doing for X, Y, and Z for fulfillment, because the most important need is the basic one of food, shelter, stuff like that. I do think that there's. I mean, I've noticed it. So one of my colleagues is 20, and when I was 20, it was nightclubs and uni, and a lot more drinking. And now, I mean, she does drink, but not what I remember it to be. It's we go to the bar, we'll have a whatever, and it seems like it's changed. And I mean, there's definitely a much deeper dive we could do into why, but I do think that people are a lot more conscious. There's lots of health apps and wearables and bits and bobs, and people are really interested in tracking this. And I do think that if you aren't healthy, then does having an extra £1 million in the bank make any difference if you're in chronic pain every day? I know what I'd rather have. So, and interestingly, I read a book really nerdily while I was on holiday on telomeres and chromosomes and bits and bobs like that. And one of the things that they were talking about, there was an analogy right at the beginning of the book, and it was talking about two people who were chronologically the same age, but one's entered the disease span and one's still in their health span. So if they live to 80, one might get to sort of 70, 75 before things start to go wrong, and the other one's in chronic pain from their 40s. And that, I mean, I won't, not that I'd spoil the book because I can't imagine many people would want to read it. You're talking like some sort of thriller. I don't want to give away the end. Yeah. Honestly, it was the right page turn. It was the right whodunit. But you're absolutely right. If you look after yourself, which I think people are more in the main more conscious of, there's access to. I mean, private medical, for example, some of the providers give you access to MOTs effectively each year. I mean,
interestingly, I've just used mine. So next Monday, I've got a 30%. I've got to pay for it, but I've got a 30% discount on having an MOT, and it's a bit more in depth than the NHS one, but just lets me know whether I'm on the right track or not and what changes are that I need to make. Still like the odd beer, Nathaniel. I don't think that's going to change fundamentally, but actually having a just window in terms of how I'm getting on. And just
I think it's so valuable. I know some people want to stick their head in the sand and would rather not know, but I'm definitely in your camp, which is I'd rather know because then I can make some changes and hopefully that thing won't happen. But you're absolutely right about the beer. I remember there was a quote from Nigella. It was everything in moderation, including moderation.
Yeah, 100%. It's a really interesting, and again, funny enough, I'm just speaking to this person on this particular piece of research because there's a guy, he's a US academic, for a professor called Scott Galloway, and he talks about, and he said it quite flippantly, but he's got this really interesting perspective, because he talks about the fact that alcohol we know does damage, but as a social lubricant, we ignore it.
Yeah, we've talked about this. You're spot on, isn't it? Because if you are a hermit and you're afraid to go out,
you don't get the social well-being, and actually that's a dependent part of having a really good life as well.
Absolutely.
Clearly you don't need a drink, but I think in as you say, everything in moderation is key. You mentioned earlier about the element of risk of death being relatively low, but also in terms of the premiums reflecting that.
Yeah.
Tell me a little bit about the things that you know are the main risks from a sort of stats perspective, and the things that we should think about when we're thinking about protecting ourselves and our business.
So if you look at, we've got lots of different products, but if you take most of them to the brass tacks, they're built on three types. One's life insurance, pays a lump sum if you die, doesn't if you don't. The second is critical illness cover, which is a lump sum on death or diagnosis of things like cancer, stroke, heart attack, etc.
Yeah.
And the final one is income protection, which I've already described. I won't go through that in any great detail, but an income replacement when you're ill, basically. The stats that come to mind, and I'm just going to say, take this with a pinch of salt, because I can't remember the source of it and I haven't seen it in a while, but this is what comes to mind. About 4% of people will die during their working lives. Yeah. For critical illness cover, you're about 4 to 5 times more likely to suffer that during that same time span.
Yeah.
And I think it's about 1 in 3 of us during our working lives will have a period of time off sick from work of at least 2 months. Now, I think where I got that from is a combination of a legal and general report and a Liverpool Victoria report. And obviously they do, they're not just going to publish stats that are a load of nonsense. So I'm fairly certain that that's where they're from, but I haven't got them in front of me and I can't remember exactly. So, the actuaries that these insurers are going to work out what the risk is and the price accordingly, so that they can make some margin, pay their bills, make some money for the shareholders, and make sure that they've got enough money in the pot when a claim happens. So, death is relatively unlikely for most of us in that working span of our lives. Obviously, things like whole of life, they're priced much higher than normal life insurance, because it pays out when you die rather than if you die during that term. So it depends on how it's set up as to the relative cost of it, because a whole of life plan could be much, much more expensive than, say...
As long as you pay the premium, it's guaranteed to pay at some point, right?
Unless there's a material non-disclosure at point of application. But to be honest, with most people, the whole point of a whole of life plan is that it's for inheritance tax. At that point, you'll have had to build up some wealth, so you're probably in your 50s plus. And because of the sum assured combined with your age and the potential for some medical disclosures, they're probably going to ask for a GP report, a medical, and maybe some tests anyway. So it's kind of the sphere that we work in, most have some underwriting requirements that I've just listed. When you're looking at, say, a 25-year-old buying their first place, no medical history, and it's not high sum assured, it just goes through their automated system. So I think most people in our industry, it's probably like 1 or 2 in 10 go for extra information. Ours is probably more like 8 or 9.
Yeah. And how long does that typically take when somebody is thinking about, right, I need to put this in place? And does it differ for the group stuff that you do compared to the individual stuff? What's the typical difference?
It's difficult to say, because unlike where you've got lots of people, mortgage broker who does protection off the back of it, for example, they might do 20 deals a month, and then they're talking to the clients about protection, and it's relative, within a give or take a little bit, it's relatively the same advice per client. We've got businesses that are turning over tens of millions plus, and we've got companies that are just starting out. So there's different bits that are relevant at not only different sizes of company, but also different points in their journey. Shareholder protection, for example, is basically irrelevant on day one because there's no value in your business. Fast forward 10 years and you're worth £20 million, then you've got a big problem. Similarly, when you get to a size, it's possible that you don't have any key people anymore because you have put everything down in systems. There's a board, there's management tiers, and you can always move someone somewhere. But when you're an SME and there's just you and your mate starting it in your garage or something, there's much bigger risk. So it's hard to say how long. I'll give you two extremes. One was an introduction to a company that wanted to put a private medical policy in place. They did moratorium underwriting. I won't go into it unless you want me to speak about what that actually looks like on the coalface, but it's a quick way of getting a policy in place. Met them on the Thursday, it was live on the Friday, and that was only because they had to sign some bits and send us a couple of documents. It could have realistically been done on the Thursday. On the other end of the spectrum, one of the bigger ones we've done, solicitor had done a shareholder agreement. In that agreement, it said, if you die or become very, very sick, there'll be a deemed transfer of shares, so you need shareholder protection. So we looked at that. When we met the client, two owners plus FD and future MD are all key people. We want to give them all a relevant life plan to make sure they don't go anywhere, and we want to give them all executive income protection. So 2 policies turned into 14. I met them March 23. March 24 was introduced, March 25 submitted, and then the policies all went live over the September through January. Something like that. It might have been the year before. Anyway, whatever the dates are, it was March to March for the applications, and then it was up to the following January before they all were live. So, but that one, that was at that top end of the insurer wants not just... It wasn't just a GP report and things. They wanted non-fasting lipids, HbA1c readings, hematology. They wanted everything. And that's not to scare anyone off of doing it. It's actually a benefit, because if you think about it, if you do the sort of more bog standard lower end cover, and you go straight through the system, but you've forgotten something or you weren't aware of it, you might be paying that premium for a long time, and it is possible that then gets flagged at the end and doesn't pay.
If they've done more due diligence up front, the
certainty of payout goes up.
The certainty of payout increases, but it just takes a bit longer.
Just on that, Chris, so just anyone who's listening who's concerned that, oh wait, do you mean that some of these policies don't pay out? The reason that some of these policies don't pay out, and it's a very small margin, is typically because there is a non-disclosure. And that means that you are someone that smokes and you say you didn't, or you drink a lot more than you said you did, or you're a bit heavier or a lot heavier than you said you were, or you forgot to say you had cancer last year. I mean, that's a bit of a silly example, but it is one that I have actually had where the client forgot to disclose cancer within the last year and a bit, which was flagged and we sorted it out. But if it hadn't been, it almost certainly wouldn't pay out. So the statistics on those, life cover pays out in the high 90%. Critical illness is probably the mid 90%, and income protection is probably the low 90%.
But the point you're making is just make sure you're open and honest, make sure everything's on the table, because actually the value, your premium might go up, but the value of the insurance is only predicated on the fact that it's going to pay out if you need it.
Absolutely. These contracts are gone into in utmost good faith. The insurers require you to tell them material facts so they can make a decision. What is the point of spending money every single month that when it comes down to it, doesn't pay out? And sometimes, I mean, it's hard as an industry to sort of fire back at these things. But I saw one last year or the year before, and it was a guy very upset. His wife had got a critical illness diagnosis, and he went on this huge tirade about how terminal illness on her life insurance didn't pay out. But terminal illness, whilst it sounds very similar to critical illness, again, It's not the same. It's jargon, which I get as not a lay person, but someone who's not in the industry. You don't really know the distinction between. But for clarity, terminal illness on life insurance is if you are given less than 12 months to live, then it's an advance payment of the life insurance.
Yeah.
It isn't on diagnosis of a critical illness. That's what critical illness cover is. But that's why critical illness cover is significantly more expensive than life insurance, because
it's more likely to happen.
He was understandably very upset. I'm sure he was very stressed, and there's no criticism there in the sense that he's going through a horrible situation that wouldn't wish on anyone. But it's the communication maybe from his advisor, or if he went direct, I don't know. And then the fact that he's saying these things, but actually when he's explaining it, there is actually a really good justification why they didn't pay out.
Yeah, 100%. And that's to do with that clarity of communication, I think, and working with a professional should hopefully help you understand whether the cover you've got is right for you. I think you made a really interesting point that I think we'd like sort of is worth further explanation, because it's one that I talk about when I'm helping clients plan for what happens in terms of that lifespan and health span, right? So it's interesting because the stats say that we're going to live. Most people in the UK on average are going to live to our 80s, but I think what is worth reflecting when we're building plans is the fact that the stages of life are often different. So if we're in our mid-50s to mid-60s, a lot of my clients anyway are in the go-go years. So they're still in the years where their energy is good. They're not as young. They're not as young as they used to be. None of us are, but they're still really physically active and well, and they've really got time to do the stuff that they want to. That's always been on their list. And then it often, we go into like the slow go years. You've done all that stuff, but you find yourself in a position where you don't want to do that frantic pace anymore, and then you've got the no-go years. And I think the interesting thing when we're building plans for clients is people often assume that the amount of income they're going to need to stop is a straight line. I'm going to need 70 grand a year when I stop to live the life you want. I think there's always some value in thinking about the income you need in a bit of a three-tiered process, and top-loading the income you need in your mid-50s, 60s to probably your mid to late 70s or longer, depending on what your health's like. I think a lot of people think they need that consistent level of income, and in reality, with the clients I work with, it's never a straight line. And thinking about that,
it's not, for sure.
Yeah, thinking about that when you're doing your planning is worth doing. Tell me a little bit about the story that best describes the work you do, Nathaniel.
It's a personal one, actually. So my dad passed away at 58? Is he 58? Oh, anyway, let's say 50. Yeah, it was 58, right? So he passed away, and he had 3 instances of a critical illness in the 4 years before he passed away in 2016. So I think it was 2013, he had a bleed on the brain, both sides. He was blue lighted to Queen's. They drilled a hole, pulled the blood out. It was surface level. It was as good as you could hope for under that. He only forgot memories for about a week, but he was basically okay after that. The next year, he had colon cancer. Again, that was as good as it could get, and it was cut out, stoma, no radiotherapy or chemotherapy needed. And he had a year of recovery, or 18 months, and then he got metastatic bladder cancer, which I took him in one Friday. Exactly 6 weeks later was when he passed. He had a business. He was a chef, and he had a takeaway, so it wasn't a huge business, but he had a few people working for him, and at that first hurdle, it all fell apart. because he was the main hardest working person in the building. He'd always worked, I don't know, stupid hours, like 60-hour weeks on your feet with hot oil. And, I'm half Chinese, a Chinese chef. So, the woks on the burner and massive cleavers. And to be honest, I'm surprised he had all his fingers left. But he never, I wasn't in the sector at the time, but he never took out any life insurance, income protection, anything at all. And then it was very difficult for us to support him in that time because, I was younger and, bits and bobs, personal stuff that I won't go into, but it was just very, very difficult. And if he'd had even a minimal amount of these sorts of policies, then I don't think what would have happened to him would have changed, but how it happened to him would have been immeasurably different.
Yeah.
Because those things would have allowed him to have options, not be... Life sort of happened to him after that point. He didn't have the chance to do, I'm going to do this, going to do that, whatever. So when I sit in front of business owners, for me, it's not about flogging them the biggest thing that I can do and getting the most amount of commission. It's making sure that what we do for them is as perfect as it can be, given that we only know, imperfect information. But for now, and for as long into the future as we can possibly go, because we don't really want anyone to claim on any of these policies, to be perfectly honest, because that means something bad's happened. But what we do want to do is when we have something like that, we can go, yes, you've got that thing. Here's the thing. If you need us to help with the claim, you can either do it yourself. We can help. Let's support you.
Yeah.
We've had quite a few phone us up that we've tried to get in touch with, but they were always too busy. And then the things happened, and then they want to take it out. You can't get car insurance the moment after you've had a car accident.
Yeah.
So we had a guy who he was my age, I'm 38. He had a stroke at 38, and he did manage to recover a bit, but he was going to have to go and have a stent put in his brain. And he phoned me up and he said, what did I take out? Can I claim on anything? Really sorry. We tried to talk to you. He had a business. I don't know what's happened to the business since, because I didn't end up doing any cover for him, because despite a lot of contacts, over 10 emails, phone calls, texts, could never pin him down. He was always too busy. But he wasn't too busy after it happened.
Yeah.
Then the next one was, this was key person income protection, so replacing the gross profit that person generates. He's a barber, very good one, generating about 10 grand a month for his business. Got some others, but they're not as proficient, not as good, whatever. He charges a higher fee. He fell down the stairs and he broke his back, mid-30s. He had to force himself to go back to work about 2 or 3 months later in a lot of pain, because otherwise the business was going to collapse.
And a potential impact to his longer-term health when he's...
100%. I mean, I've never broken anything, but I've torn the ligaments in my ankles playing basketball, and I know that if I go back too quickly, I don't heal.
You need to recover.
You need time, right? And that, if he'd taken out that policy, he would have had thousands coming into his business to replace what he was doing. That would have kept the lights on, and he could have just gone, I can take a breath, I can recover. And there's loads of stories like that, and it's so disappointing to have that conversation, because you don't want to be like, I told you so, because we're not like that. But
But you know what's interesting, particularly business owners, you're too busy until you're not.
Yeah.
And I had a conversation with somebody who referred me a client last week, and it was 2 dentists, and this guy said, "Look, Chris, they really need you. They really need you. I'm their coach. I'm helping them with the business side, and what they need is somebody to give them a bit of a longer-term perspective." And trying to get in touch with them, no joy. And again, we always follow up, because that's the right thing to do. And we went back to the guy and said, "Look, we tried, not getting any response, we'll leave it down to you. If they want to work with us, great. If not, absolutely fine. But we've done our best to get in touch. And he said something really interesting to me, which was their perspective is we're going to get our head down and work our way through it. And he said to me, that hasn't worked for them for the last 20 years and it won't work with them for the next 10. What they need is a bit of reflection, a clear plan, and actually somebody to support them to do that. And I think we've got a privilege, actually. We've got a privilege to see, as business owners, to see the stuff that goes wrong and the stuff that goes right.
Yeah.
And it sounds like the experience with your dad, because it felt so personal, is probably taught you a few things. So what do you think you learned from that experience?
Don't smoke was one. And, look after yourself is really important. Weren't the healthiest.
That catering chef culture is brutal as well, isn't it?
I love cooking. I love cooking at home for myself, for friends, family. He refused to let me go in, and I was like, oh yeah, I'm not that bothered anyway. Don't want to get burnt. But it taught me that on a personal level. And then, at the time, I still had my old career, and I wasn't in financial services again, but didn't really teach me anything for mortgages because obviously it's quite different. But when I came into this, it was very much that that old adage that everyone knows is hope for the best, but prepare for the worst.
Prepare for the best, prepare for the worst.
And a lot of the consumer duty are sort of affecting both our sectors. We need to evidence that we're giving fair value to the client. So we give them all the options, but we're not stupid. We know that there's budgetary concerns. So we need to make sure that we help them prioritise what is the key thing, because there might be 10 different things potentially, but that's going to cost a lot of money. So you can't afford that. Okay, we need to highlight the top 3 maybe, or 6, whatever you think is within budget. And it doesn't necessarily mean that we just cut away whole policies. It might be that we minimise the amount of cover in those policies so that you can have more of them and a wider spread of cover. But it's just, if you're smart and driven enough to start or run a business, you can't you need to look forward and how you're going to grow and all that stuff, but you can't exclusively look at those things, because if something comes from behind or to the side and derails you, take it full circle to the beginning of the conversation. If they are looking to sell and you haven't considered these things, and then that doesn't work out for you, you don't exit, and the money that you've got wrapped up stays wrapped up.
I think the other thing that I'd counsel people to do is, in every business, there's, particularly when you're starting an SME, there's always a key person dependency. There is in my business and there will be in yours. But how do you build a plan to make sure that you're less of a key person in the future, particularly when you come to sell, because that's going to have an impact on valuation as well. Nathaniel, I've loved today, mate. Thank you so much for sharing your expertise and insight. Where can people find out a bit more about you?
So they can go to the website. It's www.businessprotected.co.uk. The email is nathaniel@businessprotected.co.uk, funnily enough. I'm on LinkedIn. And if anyone wants to reach out, contact details are all over the place. And we'd love to have a chat. None of it's hard sell. If you need to just run some stuff by, like what would you do in these scenarios? And we work obviously with professional introducers as well as the end clients. So I think just be good if more people talk about it. Basically, for an hour.
Hopefully this has an impact towards people doing more of a planning for the best and preparing for the worst. Thank you, mate.
Absolutely. Cheers.
The issue we've got when we're thinking about what happens next in our lives is having the self-awareness, having the introspection to be able to think about what the gaps in our well-being are. And we're doing loads of work at the minute with What Happens Next to build solutions that are going to help you think about well-being in a nuanced way when you're thinking about how it applies to your life. One of the first things we've built that you can use today is our What Happens Next quiz. It's free to do, takes about 5 minutes, but what it will do is give you an insight into the areas of strengths when it comes to your well-being and the areas you might want to improve. You can take the What Happens Next quiz at whathappensnext.life/quiz, and I hope it helps you in your journey to work out what happens next for you.